Hello and welcome. You're watching Market Cafe with me, Ankita Saxena, and with me is Snehi Shah. Fresh day of trade. It's the last day of the week, Snehi. Global markets don't look very good. Sharp cuts coming in there. Even the NVIDIA rally didn't really help the markets yesterday.
Absolutely, Ankita. Now the US markets were exactly mirroring the shade of your outfit today, and deep cuts coming all over for the US market. With that, let's look in detail at what the US market did. And stocks fell sharply on Thursday after a tech rally sparked by stronger than expected NVIDIA results, which were short-lived. Now, despite the company posting earnings that beat expectations and raised their guidance, the stock closed just 0.1% in the green. Traders also braced for a key speech from Federal Reserve Chairman Jerome Powell. The Dow Jones Industrial Average closed 1% lower. The S&P 500 lost 1.35%, and the tech-heavy Nasdaq Composite shed 1.9% almost. Now, Thursday marked the worst day for the Dow since March, and the S&P 500 and Nasdaq had their biggest one-day loss since the 2nd of August. Now, tech is what really weighed down the markets, and that's where all the negative action was, as IT stocks were the S&P 500's biggest loser, ending Thursday down 2.1%, weighed by declines in other semiconductor stocks, including Advanced Micro Devices as well as Intel. Now, shares of major tech companies saw declines during the session, with Amazon losing 2.7%, Apple falling 2.6%, and Netflix dropping of 4.8%, a whopping figure coming there. And US Treasury yields climbed on Thursday as investors waited for signals on monetary policy from central bankers' comments at the Jackson Hole meeting in Wyoming later today. So all eyes will be on this meeting. Let's also look at the handover coming in from Europe then. And largely a mixed set of handover coming in from Europe. Let me just refresh my screen and let you know what Europe is doing. And yeah, so like I said, Europe is also largely mixed. FTSE closed up almost 0.2% at 7,333 levels. It was the DAX that took cuts of almost 0.7 level. So largely mixed handover coming in from Europe as well, but very deep cuts coming in from the US markets, Ankita.
That's correct, Snehi. Deep cuts coming in from the global markets, and if you look at the GIFT Nifty, can we have GIFT Nifty on the screen, please? GIFT Nifty is up 0.1%, very, very flat in the green, but absolutely flat. But a very negative global handover that's come in this morning. Let's go across and look at how the oil is faring. Now, oil prices are also under pressure. They slipped yesterday, still under pressure from the previous days. Weak data from major economies, which had the investors really worried about the demand outlook. Japan reported shrinking factory activity for a third straight month in August. Eurozone business activity also declined more than expected, and Britain's economy looked set to shrink in the current quarter. The US business activity also approached a stagnation point in the month of August, with growth at its weakest since the month of February. Now, all these factors, slowing down of growth, has been putting a lot of pressure on the oil prices. Brent crude and WTI fell 0.2% at their lowest sessions low. They were down almost probably more than $1. And currently, if you look at the prices, Brent crude currently stands at $83.48 a barrel, and WTI is at $79.2 a barrel. So that's where the crude is at.
Absolutely, Ankita. And with that, let's also look at all the important cues that you should be tracking today. And the biggest cue is that Powell will be speaking at the Jackson Hole meeting in Wyoming today, and he will be talking about where he thinks inflation is headed and the action that the Fed is going to take going ahead. So all eyes will be on this meeting. Also, the ECB president, that's the European Central Bank president, Christine Lagarde, will be speaking today, and she will be giving a speech today. So all eyes will also be on the course of action that the European Central Bank is keeping in mind. Now, looking at cues closer to home then, and annual general meetings, you've got Aurobindo Pharma and Info Edge. They will be having their AGMs today. And in other events, ticket sales for the 2023 World Cup will begin today. Now, remember, for MasterCard holders, the ticket sales already opened yesterday. So if you're a MasterCard holder, you better get your hands on those tickets because they are selling out quite quickly. Looking at the GIFT Nifty as well, currently at the 19,315 levels as compared to a close of 19,386 yesterday. So indicating a rather negative start for our markets this morning, Ankita. But we'll see how that pans out for our markets today.
That's correct, Snehi. We'll move on then and go across the stories that made headlines. Well, all eyes today will be on the Fed Chairman Jerome Powell's speech at the Jackson Hole Symposium. The annual gathering is closely watched for cues from central bankers from around the world, and the current meeting holds importance amid sticky inflation and rising rates in several regions. Now remember, at the same gathering last August, Powell famously warned the US may need to enter a lengthy period of very restrictive monetary policy that will bring some pain.
And Morgan Stanley has slashed prices for major Chinese and Hong Kong stock indices for the second time in 3 months. Now, this comes on the back of lower growth forecasts. The brokerage noted that deflationary pressures intensifying and their economists have materially reduced their growth forecasts for 2023 as well as 2024. They are now 17% below consensus for December 2024 EPS and have cut their base June 2024 target prices for China equities.
And once again, Turkey has surprised the nation with a rate hike of 25%. Remember, Turkey has been cutting interest rates, bucking the global trend, much above the expectations, of course, hinting towards a new commitment of dampening inflation through monetary policy. Now, in a statement, the Turkey Central Bank Committee said that it has decided to continue the monetary tightening process in order to establish the disinflation course as soon as possible, to anchor inflation expectations and to control the deterioration in pricing behavior.
And Russian President Vladimir Putin has finally broken his silence on the death of the Wagner chief Prigozhin. He stated an investigation would take place into what happened to the private jet carrying 10 people that crashed and that was departing from Moscow to St. Petersburg. Meanwhile, he also described Prigozhin as a talented businessman with a complicated fate who made serious mistakes in his life.
And in other news, former US President Donald Trump has surrendered on charges of conspiring to overturn the 2020 elections in Georgia. He was booked at a regional jail last night under state charges, and authorities have confirmed that Trump was fingerprinted and a booking photo has already been released.
And in some sad news coming from movie lovers then, Warner Brothers will delay the planned November release of a big-budget Dune sequel until March, as the cast that largely consists of famous names such as Timothée Chalamet and Zendaya will not be able to promote the movie during the Hollywood actors' strike. Dune Part 2 will now debut on the 15th of March next year. The decision has been a blow to cinema chains such as AMC Entertainment, Cineplex and Cinemark, which are still trying to recover from the COVID-19 pandemic.
And the 15th BRICS summit concluded where leaders of the 5 member nations, Brazil, India, China, Russia and South Africa, alongside other attendees, discussed several topics. The discussions in South Africa's Johannesburg ranged from the financial stability, trade in local currencies and the most anticipated expansion of the bloc. As the meeting concludes, the group has reached consensus on the guiding principles, standards and procedures for admitting new nations. Now, with this development, 6 nations will join the BRICS bloc starting next year. The countries to join BRICS from January 1st are Iran, Egypt, Saudi Arabia, Ethiopia, UAE and Argentina. Chinese Premier Xi Jinping called this expansion historic, and Indian Prime Minister Narendra Modi shared how it will further strengthen the BRICS as an organization. Here's an excerpt from the announcement.
भारत का ये मत रहा है कि नए सदस्यों के जुड़ने से ब्रिक्स एक संगठन के रूप में मजबूत तथा हमारे सभी साझा प्रयासों को एक नया बल देने वाला होगा। इस कदम से विश्व के अनेक देशों का मल्टीपोलर वर्ल्ड ऑर्डर में विश्वास और सुदृढ़ होगा। मुझे खुशी है कि हमारी टीम्स ने मिलकर एक्सपांशन के गाइडिंग प्रिंसिपल्स, स्टैंडर्ड्स, क्राइटेरिया और प्रोसीड्यूर पर सहमति बनाई है और इनके आधार पर आज हम अर्जेंटीना, इजिप्ट, ईरान, सऊदी अरब, इथोपिया और यूएई का ब्रिक्स में स्वागत करने के लिए सहमत हुए हैं।
All right, that's the word from the Prime Minister himself. But in other big news, India's chess prodigy R. Pragnananda lost to Magnus Carlsen in a thriller final match of FIDE Chess World Cup. This after 4 games of chess which lasted 3 days finally came to an end. The first 2 games ended in draws. Carlsen clinched the first tiebreaker, and in the second tiebreaker, the young Pragnananda agreed to draw. With that, Carlsen has won his first Chess World Cup title. On the bright side though, R. Pragnananda has become the youngest player to reach the Chess World Cup final. He also defeated world's number 2 Nakamura and world number 3 Caruana in previous matches of this tournament. He is also the second Indian to achieve this position after Grandmaster Vishwanathan Anand. Though Prag fails to win the title, he definitely gave Indians a ray of hope in the game of chess. Karishma spoke to the new Grandmaster Pragnananda exclusively on Times Network. Listen in to that conversation.
Yeah, learnings and takeaways would be like, to be better prepared in openings, because candidates is the next big thing, and there would be very tough event going for close to 20 days. So that will be my next big thing. So I have to be in a good shape for that.
And the tiebreaker format in the last few months has been Pragnananda, where you've excelled, you've beaten the top in the game before. So if you've had some time to analyze your game today, could you tell me what you would have done differently if given a chance?
Yeah, game 1 was a crucial game because I didn't get much chance in the game 2. Game 1, I had a good position, but then I kind of misplayed in the middle game, and he managed to put pressure on me. And maybe I could have defended better, but in rapid, you just have to play with your intuition, and sometimes it goes wrong.
A word on what it has meant for you to have your mother by your side, Pragnananda. I'm not sure if you've had the time to go through social media, but there have been pictures of her looking at you with a twinkle in her eye when you're giving interviews, or when you're talking to the press in Baku. So could you tell me about what the support of your mother has meant for you?
Yeah, of course, it's huge for me. It's of course huge for me because this has been a 1-month tournament, and because it's also a tiring one. She was also cooking home food for me, so that way also I was getting she was just like also after a very tough game, she used to just we used to go for walks, and also it's always good to have someone with you in such events.
Well, another feather in India's cap after Chandrayaan 3. Moving on to the 69th National Film Award winners have been announced. The Best Feature Film Award has gone to Rocketry. The Nambi Effect. Director Sanjay Leela Bhansali wins Best Editor for Gangubai Kathiawadi. Alia Bhatt and Kriti Sanon share the Best Actress Award for Gangubai Kathiawadi and Mimi, respectively. Allu Arjun shines as the Best Actor for Pushpa. Devi Sri Prasad takes Best Music Director for Pushpa. S.S. Rajamouli's RRR dominates with awards for action direction, choreography and special effects. Don't miss the incredible achievements of the Indian film industry. The event, hosted at the National Media Centre, New Delhi, showcased a remarkable array of winners across various categories. The 69th National Film Awards have once again brought to the fore the exceptional brilliance and artistry of the Indian film industry.
Alright, and with that, we'll slip into a very short break. But on the other side, we'll see how the Asian markets have opened up, why they're trading in the red, and what's weighing down on the Asian markets. So you don't go anywhere. Stay tuned to Market Cafe.
Welcome back here watching Market Cafe, and it is that time of the show where we get you news on the domestic front then. Recently, a bullish note by Macquarie said that HDFC Bank and Elephant can definitely dance. This comes amid optimism that the management can double the balance sheet in 4 to 5 years and other triggers. So let's find out how the bank has performed over the past 5 years. My colleague Harsh joins in for more.
Well, yes, so Ankita, the key piece here is with regard to how brokerages are really looking at HDFC Bank. In fact, within the Bank Nifty, HDFC Bank has the highest relative return, average return, which analysts on the street are expecting at 28%. So can the elephant really dance? We've tried to break up the metrics of this one to try and first understand where loan growth will come from. 4 to 5 years is what HDFC Bank is expecting to double their book in. We've tried to combine both books of HDFC Limited and HDFC Bank over the last 5 years. HDFC Limited plus Bank has been able to grow at nearly 17%, while HDFC Bank has been able to grow at 20%, and HDFC Limited has grown at 12% CAGR over the last 5 years. Where will the growth come from? Well, fresh branches. What they are continuing to do is add branches, 1,500 odd branches to be added every year till FY26. They've already added 1,479 branches in FY23. It looks like they are well on course for that. The net interest margins are expected to dip from the current 4.3% margin to 3.8%, and that's the current guidance that they've given. Of course, a lower risk book means that there will be a margin depreciation, so expect that. But they've largely met guidance, most times over the last 5 years. With regard to OPEX, very efficient bank. They've been able to keep their OPEX ratios in check. Cost to income has been below the 40% mark, though it did rise a bit to 40% in this year due to the branches added, but expected to dip back to 37% by FY24 again and deteriorate from there. We're expecting to see ROAs therefore and profitability currently around the 1.8 to 2% band, expected to rise to 2.1%, which is probably best in class in any case. Let's look at valuations versus the 5-year average. Now, HDFC Bank's valuation versus 5-year average largely is lower because you have HDFC Limited as well, and we fully appreciate that. But let's look at all the others as well. You're seeing ICICI Bank, Kotak Bank also trade well below their 5-year averages, even though Kotak and HDFC Bank by far look the most attractive when it comes to comparing to their 5-year averages. So definitely a case there for HDFC Bank.
Absolutely, Harsh. Thanks for taking us through all those details then. And in the latest update coming from Paytm, according to sources, the Singapore-based firm Antfin is set to sell shares worth almost $250 million in the fintech today. The stake sale constitutes 3.6% stake in Paytm. My colleague Cheryl D'Souza is here with more details on this. Take it away, Cheryl.
Come August 25th, we are likely to see a block deal take place in Paytm. What we are hearing is the fact that Antfin has opened a book to sell a stake of as much as about 3.6% in Paytm, and that 3.6% stake would translate to about 2.275 crore shares in Paytm. The floor price that we are hearing is set for that stake sale is at around 880.10 rupees per share. And that floor price, if you compare it to the current market price, is definitely at a discount. Also, what we are picking up is that the total size of that block deal in Paytm is going to be around $243 million. Remember that as of June end, you had Antfin that held about 23.79% stake in Paytm. But recently, in the month of August, we saw that Vijay Shekhar Sharma actually acquired about 10.3% stake from Antfin, taking his total shareholding in Antfin in excess of about 19%, while Antfin's stake in Paytm actually dropped to about 13.5%. Given the fact that this block deal size is at around 3.6%, we are expecting that Antfin's stake in Paytm will drop below the 10% mark. But all eyes on August 25th when you will have that block deal take place in Paytm.
All right, we will be watching out that particular counter very closely. But moving on then, the minutes of August RBI MPC policy meet are out, and concerns over recent spike in food, especially vegetable prices, have led to renewed fears over inflation. Now, according to RBI Governor Shaktikanta Das, there is a need to preempt any second round impact of the food prices shocks. My colleague Ankur Mishra gets us more details on this.
Reserve Bank of India Governor Shaktikanta Das has once again warned about the inflation and has mentioned that the war against inflation is not over. In fact, he has said that the second round impact of inflation we should be prepared of. Apart from that, if you see the comments of Jayant Verma, he has clearly been once again very critical on the stance of Reserve Bank of India. Apart from that, he has also said that the current repo rate is good enough for keeping inflation under check of the upper tolerance band. He mentions that that the current trend shows that the inflation is likely to be in the higher end for next couple of months, but overall he feels that the number of 6.5% is good enough for keeping inflation under check of high tolerance band, meaning 6%. Remember, MPC is tasked for keeping the inflation at 4% plus minus 2%, and therefore 6% becomes the higher tolerance band. Apart from that, if you see the commentary of other members, Michael Patra has mentioned that recent inflation developments and outlook warrants a different strategy from Reserve Bank of India. The other member, Rajiv Ranjan, also says that inflationary shocks coming from commodities like vegetables are transitory in nature, and that is complementing the commentary which has been given by Reserve Bank of India governor earlier. He also says that real GDP growth will be driven by the strengthening rural consumption.
All right, thanks Ankur for all those details. Let's move on to an ET now exclusive then. And wealth management firm 361 will soon be applying for an alternative investment fund in the GIFT City. Now the target size of this fund is anywhere between $20 million and $30 million. My colleague Bhavya Dua is joining us with all those exclusive details. Take it away, Bhavya.
361 plans to seek approval from International Financial Services Centre to set up an alternative investment fund in GIFT City, Gujarat. So the financial services firm is seeking to file a private placement memorandum for the same with the International Financial Hub as early as 10 days. It is going to be the company's global investment strategy fund in the GIFT City. The initial target raise of the company from the fund is expected to be around $20 to $30 million. The company is looking to tie up with an international fund to launch this AIF. The two AIFs currently operating in GIFT City are Aditya Birla Sun Life Global Emerging Equity Fund and ITI Long Short Equity Offshore Fund. These AIFs seek funds from family offices and high net worth individuals and invest the money in offshore assets. AIFs in IFSC are governed by the terms of SEBI under Alternative Investment Funds Regulation of 2012. However, special dispositions have been granted to IIFs in IFSC to equip them with a higher operational flexibility while maintaining tax efficiency. The units in GIFT City get a full tax exemption for 10 straight years out of 15.
And well, just earlier this month, the National Medical Commission, a government body, came out with guidelines for professional conduct of doctors. Now, in which a mandate was introduced to prescribe only generic drugs instead of specific brands. And this was faced with a lot of opposition from the Indian Medical Association, citing issues like quality check and how impractical it seemed. But as we talk about it right now, the government rolled back the guidelines. So is a variety of pharma companies, is a visitory to pharma companies or loss for patients? Let's go across to my colleague Sameer Dikshit to get us more on this.
Yes, definitely. This year this month, on 2nd of August, the NMC, National Medical Commission, they came up with a guideline. Then it was clearly mentioned by NMC that the doctors or the registered medical practitioners, they have to mention generic medicine to their patient. If not generic, then non-proprietary or pharmacological medicine will be prescribed to the patients. And if not doing so, then they may face some sort of a strict action, which includes that suspension of license for up to 30 days. So that was a strict sort of guideline that was issued by NMC, and mentioning of generic medicine was the biggest clause. And then post the guidelines were released, there was a huge uproar. There was a opposition that was led by IMA, the Indian Medical Association. IMA clearly opposed the move, and many other concerned stakeholders also joined the wagon. For example, the pharma lobby that went in and opposed the move of government. Even the pharmaceutical associations, they were also a part of this group. Those who were opposing this entire move by NMC of mentioning generic medicines as mandatory for the patient. And when this tussle was going on between IMA and NMC, seeking that sort of atmosphere, an important meeting was held this week itself, and that meeting was also attended by Union Health Minister Mansukh Mandavia. Then the government gave it a sort of an indication that whatever the clause which are non-acceptable sort of thing, or which are creating tension between the medical stakeholders, it will be reviewed. And now a review, or the government has entirely rolled back the decision. The NMC has came up with a new notification and has mentioned that this clause will not be followed by the registered medical practitioner. Generic medicine clause has been removed. IMA biggest point was that the mentioning of generic medicines is not practically possible for a couple of reasons. For example, generic medicine is not available at all the cities across length and breadth of the country. Moreover, the generic medicines are limited in number in terms of quantity, and even quality is something which is questionable. So on these sort of grounds, the IMA was opposing the entire move. And after understanding the whole situation, now the government has rolled back the decision.
All right, thanks Samir for all those details. Then with that, let's quickly slip into a very short break. But on the other side, we'll take you through all the stocks that you should be keeping on your radar this Friday morning. So stay tuned. Hi there, welcome back, and thanks for staying tuned to Market Cafe with us this Friday morning. Now, as promised to you before the break, we told you that we'll be taking you through a list of all the stocks that you should be keeping on your radar for today's trading session. And we are joined in the studio by my colleague Ansh to take you through just that. Ansh, good morning, take it away.
Good morning. So Astra Microwave will be the first stock in focus for today's trading session, as company has secured a 158 crore deal to secure to supply satellite airborne radar and EW subsystems to DRDO, ISRO and DPSU. Apart from this, GMR Airport will also be in focus, as company's subsidiary Delhi International Airport has raised 744 crore through a 7-year non-convertible debentures at the rate of 9.75% per annum. Mankind Pharma will also be in focus, as company formed subsidiary named Mankind Medicare with 5 crore initial capital. The subsidiary's main objective is to engage in the manufacturing and production of pharma dosage forms and consumer healthcare product. Reliance Industries and Oberoi Hotels to jointly manage luxury hotels in India and UK. Lastly, defense stocks will be in focus for today's trading session, as Defense Acquisition Council has approved proposal worth rupees 7,800 crore to enhance operational capabilities of armed forces. Also, DAC has granted procurement and installation of electronic warfare suite from Bharat Electronics.
All right, Ansh, thank you so much for all those details. We will be keeping all the stocks on radars, but we have a research team joining in then. We have Vinny, we have Vamakshi, and we have Lisa joining us today. Good morning to all three of you. And first up, Vamakshi, let me come to you. A number of brokerage houses have initiated coverage on stocks. Jefferies has initiated coverage on KFintech with a buy, while Nomura has initiated coverage on Bajaj Finance and Birla Soft with a buy rating as well. Give us more details on this. What are the brokerage notes saying then?
Well, yes, a whole host of counters and focus on the back of several brokerage notes. Let's first look at Birla Soft. We have a brokerage note coming in from Nomura. Largely what they have highlighted is that the ongoing organization changes is expected to drive stability as well as revenue growth for Birla Soft. The company has made significant improvement in its business metrics over the years, and in fact they're expecting clarity to come in as far as the revenue target of nearly $1 billion is concerned. They're expecting Birla Soft to head towards industry-leading growth in the medium term. So given all these positive factors, we have Nomura initiating coverage on Birla Soft with a buy rating, target price of 610 rupees per share. Other than that, we also have KFintech in focus, we have a note coming in from Jefferies. They have highlighted is that the domestic opportunity for the company rides on financialization of savings as well as the company's growing share. International as well as alternative segments are new growth engines for this company, and in fact the company has posted healthy growth in profits as well as cash flows. So given all these positive factors, we have Jefferies initiating coverage on K FinTech with a buy rating and a target price of 500 rupees per share. And lastly, let's also watch out for Bajaj Finance. We have a brokerage note coming in from Nomura. They have highlighted that the company has consistently delivered very strong numbers. The execution especially is coming in for the new segments will be an important factor to watch out for. The company does have well diversified liabilities, and in fact the exit of HDFC Limited is a positive for Bajaj Finance. There are some fears concerning Jio Financial Services entry, but they have highlighted that these concerns are overdone, and in fact things are expected to play out in the medium term. They're seeing some very strong near-term tailwinds. The valuation premium for this counter are expected to sustain, and given all these factors, Nomura has initiated coverage on Bajaj Finance with a buy rating, target price of 8,700 rupees per share.
Right, 3 buy ratings coming in for K FinTech, Bajaj Finance as well as Birlasoft. Good morning, ladies, and thanks a lot for joining us. Thanks, Vamakshi, for taking us through that. And with that, let me come to you, Vinny. And because Nuvama has released notes on Syrma SGS and Alchem Labs on their management meet. So, Vinny, take us through what the key takeaways are of this meeting and what the note says.
Absolutely. So the key takeaways that we're getting in from the management meet that Nuvama had with Syrma SGS and Alchem. Let's talk about Syrma SGS first. What the highlight is coming in, the long-term aspiration for the company is to become a $1 billion in terms of revenue. That's a 25% return on capital employed, and 25% they're expecting from the ODM business, and a third of the business will be from the exports, is what the company has highlighted. Now, obviously, they've spoken about a guidance of a double-digit EBITDA margin that is still intact for the company. Capacity expansion, which is in Chennai as well as Hisar, is on track, is the company highlighting that. And recent acquisition of Zuari Digital bumps up the Syrma's ODM quotient as well. And in its healthcare segment, specifically where the business, where the acquisition which they've made, the company is working on that healthcare segment as well. So that is going to bump up their business further over there. Other than that, they are focusing beyond that immediate impact, and research and development in subsidiary is something that they have carved out as well. Let's move on, talk about Alchem Labs. Now, Alchem Labs has highlighted that they are expecting a high single-digit growth in India, given the muted Q1 and Q2 being contingent on the monsoon. So, yes, after that, they're expecting a high single-digit growth in India. Chronic gaining traction for the company, as well as they're looking for it to double in the next 3 years, as well as rationalizing in the US R&D spends at 8 filings per year is expected to be a single-digit growth as well. US price erosion has dropped to high single-digit for the company, and that needs to see some sustainability. That's a factor that one should watch out for Alchem Labs as well. And 16% EBITDA margin in FY24 is what they're expecting on the back of softening RM cross, price hikes in India, and lower marketing spends in the coming quarters will keep that sustained 16% EBITDA margin is what they're aiming at for FY24.
All right, Vinny, thank you so much for that. But moving on to Lisa then. And keeping with the management meets, Citi has released notes on the meetings of Emphasis and Aptus Value. Lisa is here with all the key takeaways. Take it away, Lisa.
Well, yes, Citi Conference, they met up with the management of Emphasis as well as Aptus Value. So let's look at the important management key takeaways from Emphasis first. The management highlighted that they will be seeing sequential growth in Q2, and they also highlighted that further growth is expected in Q3 as well as Q4. So growth is expected to improve from then onwards, and EBIT margin that is likely to remain in the narrow range, where guidance is expected to remain unchanged at 15.25% to 16.25%, and this will be through the remaining quarters of FY24. Now moving on to Aptus Value, the management said that levers are available for growth of 30%, and that includes branch expansion, which is gathering pace in regions such as Maharashtra, Telangana as well as Karnataka. But OPEX to assets, that is expected to inch up a tad bit further, and management also sounded off getting 30 plus DPD down to 5%, and they expect the credit cost to be around 25 bips. So these are the important management key takeaways from Emphasis as well as Aptus Value, which is highlighted in Citi conference.
All right, Lisa, thanks for taking us through all those details. And we're all out of time on this edition of Market Cafe. But as we wrap up, in our special edition called ET Now on the Go, we caught up with Bajaj Auto's Rakesh Sharma at their Pune headquarters, where he spoke about the growth roadmap for the company, for the two-wheeler major, and the trends that they're expecting for the two-wheeler industry. Listen in to what he had to say.
A lot depends on the economy. But if you just compare FY23 with, let's say, how we exited in Q4, how Q1 performed, and how Q2 is shaping up, we can already see that the single-digit negative which the industry was in has now moved into single-digit positive. So Q1 was better than Q4. And July and August are seeming better than Q1. So it's still single-digit growth, but there is a point of inflection which has been navigated.
There's a very interesting change in the automobile market, and I'd like to draw a parallel here. The SUV market, it accounts for more than 50% of the total sales. The typical Maslow hierarchy in India was migration from cycle to motorcycle, motorcycle to a small car to an SUV. But the first time buyer is not buying a cycle, he's not buying the motorcycle, but he's buying a SUV. Is there a change in the way how patterns are emerging now?
Well, even today, in a lot of these in a lot of the motorcycle segments, almost 40 to 50% buyers are first-time buyers.
Okay.
You know, whether you're talking about the entry level or whether you're talking about the top end. So there is a lot of fresh influx, which is a very good thing. A very important contributory factor is the penetration of retail finance, which used to be a few years ago only 40%. But with all the digitization and all the initiatives of the government around Aadhaar and all that, the ability to take risk on credit has got vastly improved. And penetration of finance, retail finance is now almost 76% in motorcycles.